Only when the tide goes out do you see who has been swimming naked. Amazing quote by the legendary Warren Buffett. And it's really so true, because let's be honest, the last few years, it was probably very easy to make some good money in the markets. And I still think we're overall in a bull market. However, at the same time, because people are so bullish and take so much leverage, that small corrections like we are seeing in the markets right now, just look at Bitcoin, right? At some stage, we actually dipped under 80,000. So quite a major pullback from just a couple of weeks ago, right? So definitely you can see who has been over leveraged, and it washes out quite a few people, which I think is also a healthy part of how the market naturally regulates itself. And that's why I'm going to do yet another monthly portfolio update, where I'm going to show you how my various investments are doing, as well as a little bit of my passive income from dividends, cashback, and interest. So let's kick things off by looking at my 3 different stockbrokers that I'm using. First one being Interactive Brokers. And well, here you see my total portfolio balance. And if I go into the positions, you can see actually I only have one position right now in Interactive Brokers, which is my trusted SPY5, the S&P 500 ETF UCITS version, which I buy in dollars in London at only 0.03%. That's why I love it. With Vanguard recently, they actually overtook SPY as the biggest S&P 500 ETF in the world. I mean, obviously based in the US, but now, yeah, because they lowered the fees, which is lower than State Street, and therefore more people invest in that. So fees really do make a difference. And yeah, really interesting to see. In Europe, however, it's quite the opposite, because here State Street, SPY5, is the cheapest S&P 500 ETF available. And that's why I actually switched from Vanguard in the past at 0.07% to SPY5, because it's just cheaper. In the long term, those fees do make a difference. And by the way, that's a post that you find inside the Smart Money Club, which if you haven't joined yet, you're most welcome to join. There's a link down in the description below. I'll be excited to see you on the inside. But yeah, you can see with the last day of trading from last week, I was down in one day by almost $600. And if I was just starting to invest, honestly, I could really understand how people get upset. I actually got quite a few people writing me on Instagram and other channels saying, Kai, what's happening with the markets? My portfolio is dropping. Of course, I understand it, right? Maybe you finally got into investing, a couple of weeks ago, and then you put quite a bit of money and already you're down. And that's one thing I really want you to be cautioned against, not to make rational, emotional decisions on a very short time frame. If you invest into the S&P 500, Nasdaq 100, whatever investment vehicle you choose, hopefully, I mean, at least that's what I'm doing myself with my money, you investing for the long term. And I'm really talking about years, 10, 20, 30 years. So what is a matter of weeks or even months, right? If we're in the bear market, meaning the markets drop, it could be 1-2 years of downward trajectory of the prices. That is normal. That happened before and it will happen again. S&P 500 back in 2008, 2009, some people just got into the market back then, right? They said, I'm finally going to invest. And guess what happened? We saw major corrections and your portfolio would just be in the red for quite a while. However, if you held on to it, not so long after, I mean, yeah, it took a few years, almost 4 years until 2013, you'll be back at the same point where you started. But since then, look at that acceleration of growth of your portfolio if you would have just held on to it. And that's the power of long-term investing. Those short-term fluctuations will always happen. You see here, once again, 21, 22, right? We've seen that major correction, but then a major bull run afterwards again. So that's really normal. I'm not even saying we're close to any kind of bear market or recession. It may happen, it may not, who knows? But don't panic, please. So despite all that, still up 3K. And actually that number would have been significantly higher if I would have left it here from the beginning, because as I said, I used to invest into the Vanguard and then took all those profits and then shifted over to SPY5. So in general, that number would have been significantly higher. Plus I took some profits along the way and moved them to other stockbrokers just to kind of balance them across each other. So yeah, but overall, I'm really happy and I'm really not worried. On the contrary, I always see those dips as discounted, right? I always say Black Friday came early, because now I basically get more shares for the same amount of money, right? Every week I buy pretty much similar amount. So now I get actually more shares for the same amount that I would have gotten previous weeks. Moving on to the next broker, which is Etoro. And I only started using them from September last year. So not so long ago. So obviously the overall value is still less than on Interactive Brokers, but been really enjoying the experience. If I move into my portfolio, you see here, I buy 2 ETFs, the SPY5, the same one in London, from State Street, really love that. And here I also buy the Nasdaq 100, which I buy from iShares or BlackRock, which is also listed in London. And lastly, I just recently added Amazon, my first individual share. Once again, I used to have them in the past, then stopped completely and only went all in on ETFs. But I just felt the urge to also pick 1, 2, 3, maybe 4, I don't know the number, but individual companies only if I really see strong upside potential. And having really looked at Amazon, I made a whole video about this recently, I really see a lot of future upside potential, quite likely outperforming the S&P 500. Again, no guarantees, but I just feel quite bullish on this. It's a really small position for now, around $500, but I'll be very excited to keep on adding to it whenever I see a dip in the market. So yeah, overall, as you can see, the portfolio is what it is. And here we go. As I said, I've only been investing for a few months. So now currently I'm at a loss, right? So you could say, well, Kai, if you would have kept that money in the bank account, you would have been better off. Yeah, potentially for now, but as I keep on investing to it, I will buy more shares in those companies or ETFs that I have. And long term, that will grow substantially higher than if I would have left it at the bank where it loses money to inflation. So again, I play really the long-term game. That's I'm really not too bothered seeing right now all that red. I'm really confident that long term, we've seen that over the last 30, 40 years, S&P growing 10% on year. That's very, very good returns, right? I'm confident I will do the same, if not potentially slightly higher, if I manage to get some other good companies in here that outperform potentially even the S&P. And I'm looking at a few, and of course I will make future videos in case I do decide to add other companies. With this, we move to the third broker that I'm using, and that's Trading 212. And well, here, more of the same. I'm buying the iShares Nasdaq 100 and again the SPY 5 in London. So pretty much the same. I just like to diversify across different brokers. Now, technically, you could buy all of them in one broker, right? You don't have to have different brokers. But I'm always a fan, especially as your portfolio starts to get larger, to at least have a second one, because you never know, right? Even if a broker does go bust, which hopefully won't happen, but if it does, with those brokers that I'm talking about and recommending, your funds are really safe, but it might take some time until, they are moved to another broker, if again, it was to default. So in the meantime, you want to have a backup portfolio, right? A backup broker where you can keep on investing. And that's why I like to have different brokers. And I think 3 is quite reasonable. But again, if you're just starting off, probably 1 is enough. Eventually have a second one. But of course, part of my profession these days is also to review different brokers. So it's natural that I try different ones and see where I get the most benefits out of my investments. With this, we move to my crypto portfolio. And here we're starting things off with Nexo, which used to be and still is my crypto exchange of choice. I've been using it for the longest of time. You can see here the interest I've earned so far in total is over $2,300. So really, really juicy. However, at the same time, I recently made a video about why I'll be moving quite a bit of my funds away from Nexo, because obviously we've seen the Bybit hack where Bybit actually lost $1.5 billion, the biggest crypto heist, theft, whatever you want to call it, in history. And well, I just don't think it's worth the risk to have obviously quite significant funds when you see my total portfolio, right? Why would I risk that for a bit of interest? But I would rather forgo that interest than losing all that money, right? And in terms of percentage and risk versus reward, for me, it's just not worth it. So that's why I'll be moving my Bitcoin as soon as the interest terms are up, because I locked it up for 1 month to get even higher interest. So that should come up in the next few days, and then I can withdraw it back to my hardware wallet. In fact, I just got a new one called the Ledger Flex. So I'm really excited about this. I'm probably going to make a video reviewing that hardware wallet, but I'm definitely very happy with Ledger. So yeah, once I move my Bitcoin, then I'll be left with my USDT as well as my Nexo token. And the cool thing is, once I have all that Bitcoin out, I will naturally be upgraded to platinum level, which also means I'm going to get the highest level of interest, which will be around 11% interest on my USDT. Next up, let's actually jump over to my Ledger Live app on the phone so I can show you how that portfolio has been developing, because here I still have the majority of my Bitcoin, which I always say, not your keys, not your cryptos. So make sure you take self-custody at least of the majority of your crypto holdings. And here it's been definitely a very noticeable reduction in my portfolio holding. You can see at some stage it was almost $115,000 worth of crypto, of Bitcoin. And now I haven't sold any of my Bitcoin. It's still the same amount of Bitcoin that I have here, 1.09 Bitcoin. And now it's only worth $92,000. So literally down $23,000 in a matter of days, which of course, for some might be extremely painful. And sure, I'm not going to lie that I don't care. But at the same time, I've been in the game long enough to know if you invest in quality assets that you believe in long term and have full conviction, it really doesn't matter. And once again, the same principle applies, as I just mentioned, for stocks or ETFs. When I see those dips, for me, they're really more buying opportunities. It doesn't mean that I necessarily put even more money in. I'm just going to keep on dollar cost averaging. And now I get more Bitcoin for the same amount of money than I did in the past. So for me, in a way, it's a good thing, right? And I'm not planning to sell my Bitcoin anytime soon, because I know long term, we might be looking at 200, 300, 500,000. Some people say millions worth for one Bitcoin. So why would I be selling it now when we see, a little correction of 20, 30%? That's normal. It's a volatile asset, right? It also outgrew most other assets. So it's only normal that you have corrections along the way. So yeah, while when you see the monetary value, right, the bigger that your portfolio gets, the bigger those differences are and the deviations. And when you see red of 20,000, 30,000, if you have like 4 or 5 Bitcoin, you might be seeing potentially a drop of 100,000 worth of portfolio value. But on the flip side, once we enter, once again, new all-time highs, you also quickly see like gains of 20, 30, 40,000, right? So again, I'm in it for the long term, and I really believe in spending time in the markets rather than trying to time the market, because that's very difficult to get right consistently. Now, with regards to passive income from my interest, cashback, and dividends, it's actually dropping for me month after month for various reasons. First of all, dividend income. I used to in the past invest specifically into dividend paying companies. And obviously, the more you invest specifically in those stocks, the more your monthly passive income will grow, right? But I consciously made the decision to move away from dividend investing. For me, the total returns were just more important. So now that I mostly invest in the S&P 500, they pay every 3 months. So naturally, 2 months in a row, I won't get a dividend. So only next month, I'll be once again getting dividend. But right now, since the S&P pays around 1.1, 1.2% dividend, it's really very little, right? Even on a 1 million portfolio in the S&P 500, that would be around $10,000 a year. So yeah, you would need to have a really large portfolio to really be comfortably living off those dividends. In terms of interest, that number has also been coming down quite a bit for various reasons. First of all, the interest rates have been dropping and coming down across the world, basically, right? We used to have really high interest rates in the past, but now in Europe, UK, US, most of the central banks are lowering the interest rate. So we also get less return for our money. It's still some good places out there, but definitely not as attractive anymore as it used to be. Plus also, I used to have way more cash sitting around because with my wife, we bought an apartment in Vilnius, Lithuania. So we needed quite a bit of cash for the down payment and paying off all the construction and works and so forth. So now that finally the apartment seems to be finished, can't wait to see it this summer. Obviously, most of the cash has been going towards that. So naturally, the interest I'm getting on a monthly basis have also massively come down. The biggest part of interest actually does come from Nexo right now, as you can see, around $10 to $11 per day. So that's just about $300 a month that I get from passive income just from Nexo alone. But as I mentioned, since I'll be moving quite a bit of my funds away from Nexo, that number will also drop. And yeah, it's a shame to see that going. I sleep much better knowing that my portfolio is safe rather than putting it to risk for $200-300 a month. In my eyes, it's just not worth it. I also did get a little bit of interest from Trading 212 as well as my WIO bank account. So in total, it came to around $358 for last month, as well as cashback. Right now, I'm using my WIO bank account, the credit card, where I get 2% here in the UAE. So in total, I made $92 on that last month. Well, there you have it. If you take anything away from this video, please stay positive. Don't panic. Don't make any rash decisions. Investing is like a marathon. It's really the long game. Next up, check out this video over here. As always, thanks for watching. Stay healthy, get wealthy. See you in the next one. Ciao.